Hello, everybody. Welcome to Know Your Money. I'm Bronwyn Wayner.
And I'm Craig Finch, and we are from Growth Financial Planning. We hope you enjoy our podcast. Hello, everybody. We're very, very privileged to have Sean Hanlon in here. Sean, thank you so much for coming, taking your time in your busy schedule. Sean is the Executive Director and founder of BrightRock. And Sean, maybe our clients and our friends don't know who BrightRock is. They've heard of them. They see that you support the wrong rugby team, or maybe the right one in the Western Province. They are doing well, I must say. But yeah, can you tell us more about BrightRock and your journey? Because I think you and I come back together a long way from the Liberty days and how it's become a great company called BrightRock. If you can give us more insight.
No, sure, Craig. And thank you very much. I appreciate being here. It's my first podcast, so I'm breaking new frontiers. But BrightRock really came about as a result of us having a look at a massive disconnect in the advice process between understanding a person's needs and then the end product that is there to actually behave and support those different needs in terms of your needs being different. So if something happens to me today, I get ill or God forbid I die, do I have a bond that I have to protect my family for? What kind of estate duty do I have? I have various needs that are short, medium and long-term needs. But the policies that are used then to structure the solution to those needs, is really quite one-dimensional. So in other words, I buy a whole of life policy. And that means that, and I started in the industry as a quotes clerk. So I worked out that when you work out your rand cost per mille, so your rand cost per 10,000, it's based on your sum assured over duration and over the shape of the cover. So if I put all my needs into a one-dimensional block of cover, costing it to whole of life, which could be 108, 103, 104, 5, 110, whichever the company chooses, then I effectively am paying more today. For cover that I potentially will not use in the future. And so our view was why could we not design a life assurance policy that could actually platform advice and match each need. So my bond is 20 years, so we match those 20 years. My income needs, my number of paychecks I need to protect. If I'm 40, if I'm going to retire at age 65, it's 25 years. My last year of work, I've got 1 year's worth of paychecks to protect. And bringing that to the marketplace provides our very first pillar of our design behind the product, which was efficiency. So you can create a far more efficient product if you can match each need precisely. The second thing is, what if I outlive that need? In other words, I've paid off my bond now. Our second pillar of our product was flexibility. So you have the ability to take your premium, which in our case grows at a fixed percentage, and it's not an illustrative premium, it's a fixed percentage. You can use that premium to go and buy other cover if you want. So I'll give you an example. My oldest son has turned 24, so my childcare need for him is no longer needed.
Hopefully.
I'm sure about that.
You're lucky.
No, I've got 4 of them, they're bank draining. Anyway, but nonetheless, so I've taken that premium of his and I've transferred that premium into whole of life cover for my estate. So that's the second pillar. And then I think very importantly is the third pillar, which is the issue around certainty. So if you ask a person, if your benefits go up next year, what will your premium go up by? They can't tell you in certainty what it will. With us, it's a fixed percentage. And that's very important because sustainable life assurance is important. Because if I'm overcharging you for cover today, you're not going to use in the future. But I'm creating a premium that you can't predict, and that's unsustainable. I'll kick you out of the system when you're older and a bigger risk. So we wanted to bring those 3 pillars to the marketplace, and it was a fundamentally different shift. I've been, Craig, not in this industry as long as you, but I think I've been in the game. I know it's not showing, but 36 years, and I've loved the industry. It's a passion of mine, and I wanted to provide a product that could work with advice giving.
So your journey started where? You left Liberty, and then what happened?
Yeah, so as I said, I started at Liberty as a quotes clerk. I applied to be a broker consultant, but in those days we had to write psychometric tests, and I failed. You can imagine. So, so I said, I'll take anything. So it was a great grounding for me, right? And then
it just shows how these tests are so skewed,
especially with multiple personalities. I would say. But anyway, nonetheless, who wrote it on the day? But yeah, so then I had a great career at Liberty, and I met amazing people, and those same amazing people started an amazing organisation called Discovery, and I was very, very privileged in 2002 to work with them and join them and to be part of what is, in my opinion, sounds like I'm selling them, aren't they? Is an international success. Let's be frank. Yeah, and South Africa should be proud of the amazing business that Adrian Gore built. And it was actually when I was privileged to do work in the UK for Discovery, which is what is today Vitality, that I actually started to question. This whole Phase Act came out. And in the Phase Act, when I wrote my RE exam, there's six there's six steps. Okay, in the
financial planning process.
In the financial planning process, and I only wrote it twice, not because I'm stupid. It was just very enthusiastic.
Yeah.
But step 2 says you must understand your client's needs. Step 3 says you must find an appropriate solution. And it was like it was on a plane flying back, talking to a young actuary called Skalk Malone. That the idea was born.
Amazing.
Then how did you fund it though? I mean,
No, that was hard. Okay, so we obviously we went around the marketplace and I actually met Miles Jafford, who is an incredible guy. He's an unassuming person. He was one of the founders of Hollard. And he obviously ran a business, him and Johnny Simmons, fantastic people. Mm-hmm. And I put together, Skalk and I put Suzanne, also one of the founders, Suzanne Stevens. We pitched our dream of what we wanted to do. We wanted to really, really bring a product that could platform advice giving. It's so important because if you look at the world, it's moved away from institutionalization to individualization. Mm-hmm. So if you look at our product, if you look at our product structure, our grid, if each of us around the table fills out that grid properly, we've got different income needs. You certainly don't have as many children as I have. Okay, I hope not. Okay, but I have a bond. You might not have a bond. And we all generate a solution as unique as our fingerprint. Mm-hmm. And that individualization was so core. If you look at where the whole world is moving, it really is moving into a world of individualization. And why should life assurance?
Did Miles have the money to back you? Or did he? Okay.
Yeah, he did. And
the life license was, because that's not easy to get in South Africa.
Yeah, so they had a life license. They had a life license called PIN Africa, which we then eventually bought.
Okay.
And opened our own life license. We also we were also looking to expand quite rapidly, and about 8 years ago we sold 51% of the business to Sanlam.
Okay.
Who've been a fantastic backer of BrightRock.
So the big daddy in the room, they've
I think quite cleverly on their part. They're partaking in something that is not they're not doing.
They haven't got the products.
Correct, yeah. And we're reaching markets that they're not in. So I think collectively for them it's a very clever move.
Yeah.
Also good to have a big daddy, as you say, Craig, in the corner. And I mean, we're 15 years into the game now. We're seeing the claims pay out.
You were saying in COVID, off air, you were telling us about that shock, eh?
Yeah, no. I mean, anybody who tells you COVID, if I had to ever write a book, but I can't write, okay, I can't spell, but nonetheless.
There's AI though.
Yeah.
Oh, what's that?
Yeah.
But if ever I had to write a book, there would be a special chapter called COVID.
Really?
No, it was fascinating, right? Because in 2021, people, when Delta came around, people started to die, and I mean, our claims went through the roof. In a matter of 24 months, we paid out 1.48 billion rand in
Jeez.
claims versus, which is nothing compared to what the other big companies with big books paid out. But for us, 10 years into the game, to get hit with a pandemic, it was devastating.
It was much more than the years before.
Well, I mean, it was in 24 months we paid out more than we did in the previous 10 years.
Wow.
Jeez.
So that just gives you a sort of a quantification of how big COVID was. I think we talk it down a lot. A lot of people, it was spectacular. I mean, the vaccination and the anti-vaccination and the lockdown, and did this thing come from Mars? And was it a conspiracy? And I mean, it's the one. I mean, I would travel around the country, and people would, and so we built in COVID loadings. So if you weren't vaccinated, we built a loading into your new business premium, and it was met with such anger, and people were saying, it was us trying to rip the market off and all of that. I mean, and people said, they came up with a vaccine too quickly. But I mean, epidemiologists have been working on this for 150 years. So it was, I promise you, you're going to have some of your podcasters start stoning me, okay, on this issue. But it was a fascinating time.
Must be scary as well, because in a life company, you're not sure if you're going to be surviving this whole thing.
Oh, Craig, you remind me of my next door neighbour. I was running up and down the driveway because we were all locked up, right? And he used to put his head over the wall and saying, owning a life company in a pandemic is not clever. We still have a drink together every now and then. It was an interesting time.
And what would you say is your why behind it? I know it is client base and needs. Is that the why, or is there more to the why?
Very much the why is designing a product that can accurately and efficiently meet the different needs in a person's risk exposure. Okay, so that is distinctly our why. But we did other things. If you look at the issue around certainty, we also look, if you look at how dread disease evolved over the years, how disability evolved over the years, and I have to say, you've got to give a lot of credit to Discovery, for a lot of that innovation.
You were a part of most of that.
I was very privileged. I played a small part, but I was privileged. But the reality is that we looked at the amazing claims definition sets, and there were still some flaws. So, for example, why do you use activities of daily living to assess your claim, your first claim? Like if I'm a Parkinson's sufferer, why do I have to be at the end stage of that disease before my dread disease pays out? So we removed ADLs as first pass assessments, okay, and we pay on confirmed diagnosis. Now, no one else in the industry does that. Now, tell a Parkinson's sufferer who's been confirmed with diagnostic, okay, that, you've got to be at the late stage of your disease before you get paid out. Pretty difficult from a consumer point of view.
Yeah.
So we'd like to unpack those distinguishing in the next episode.
Okay.
So Sean, good to have you here.
Thanks,
Look
Greg.
forward to the next one.
Good to see you again.
You too, man.
Thank you.
So
Cheers. Thank you for listening. If you have enjoyed this podcast, would like to subscribe, please visit our website, www.growthfp.co.za. The information we have provided in this podcast is our personal opinion. For more detailed information, please discuss your financial situation with a financial planner.